It's Catherine at Sunny Ranch Wealth, and welcome to the weekly roundup, where I'm going to be breaking down some news stories from the investment side of things, the market side of things, some news stories that don't have anything to do with investments, but I think are interesting. And I'll be bringing you little tidbits of personal news here and there, as well as exciting things are happening in my life, which is not always the case, but sometimes it is. So we are going to jump right in by talking about what the heck is happening in the United Kingdom. So if you've been watching the news today, it's Thursday, you won't be watching this before Friday, you'll know that the Prime Minister of Britain, Liz Truss, who has only been serving for 6 weeks, has already resigned. And it's interesting because what we're seeing here is the real-time impacts of politicians' responses to economic crises having a huge impact on whether they continue to serve in their roles. So basically what happened, Liz Truss came into office. She had a really strong and ambitious is maybe not the right word. I'm going to call it aggressive policy agenda on the economic side. So basically she came in really hot saying she was going to slash taxes. She had a huge plan to slash individual tax rates, especially on the highest brackets. She was going to really slash corporate tax rates. And that was all going to be accompanied by a huge increase in government spending, which was extremely concerning to the markets because she announced this huge increase in government spending while cutting taxes. You do the basic math, where's that money going to come from? And there was also a lot of concern that this plan, which she and her advisors thought was going to stimulate growth, would in fact have the opposite effect. And during a really high inflationary environment, which we're in now, inflation in Britain is running even higher than inflation in the US. Do you really want to be increasing government spending while you cut taxes when there's too much money in circulation and things are already expensive? So this was really a prime example of where disruption was not a good thing. She announced these policy changes. There was an immediate backlash. It sent UK financial markets into total turmoil. Free fall might be too strong a word, but the UK bond market was certainly approaching that level of uncertainty and instability. And then since then, she's basically been trying to walk back pieces of her agenda little by little to try and calm financial markets. Obviously, she was unsuccessful given that she resigned. Not being in the UK, this feels like sort of an exciting thing to be watching. It's odd for us, certainly in the US, to see a politician, a leader of a country resign after only 6 weeks. They should have a new leader elected there in the UK by the end of the month. So hopefully some stability there. In the meantime, if you own international bonds, including UK bonds in your portfolio, and also if you have exposure generally to developed international equities included in the UK market, you're going to see the effects of this in your portfolio. But hopefully it is short term based on what the markets thought that Liz Truss was going to be doing. And we don't see it having sort of continuing effects. We have a new prime minister come in who has more standard, more expected economic agenda, and things can kind of move forward from there. Closer to home, we've got some exciting news in the US housing market. 30-year mortgage rates are now averaging above 7%, 7.2%. So for all of you out there who are looking to buy a home, I feel for you. It was crazy 6 months ago when there were tons of bidding wars, but I guess at least rates were low. Now is a great time if you are looking to buy to really make sure that your mortgage broker knows their stuff. This is the environment where a really detail-oriented mortgage broker who is really current on the options that you have to reduce your rates, whether it's through an adjustable rate mortgage, buying points, or seller concessions that can lower your rate, they can really, really save you a lot of money. So if you're just looking and you don't have a mortgage broker, or if you feel like your mortgage broker maybe isn't cutting it, this is a great time to reevaluate. Along with rising rates, we've seen declining home sales, which is maybe good news. So home sales have declined for the 8th straight month in a row. They were down 1.5% from August to September. And as of September, they are down 23.8% from the previous September. So a significant decrease, but unfortunately, that doesn't mean that home prices have really come down. Analysts and people who follow the US real estate market closely think that home prices probably still have some room to fall. Obviously, that's going to depend what happens in the overall economy, what happens with this overall concern about entering a recession, but certainly something to keep an eye on. The rise in rates is going to be tied pretty closely to what the Federal Reserve is doing, which is also inextricably linked to the volatility that we've seen in the stock market recently. The big news out of the Federal Reserve this week is that they're no news is big news, but they are continuing on their path of aggressive rates. And now Federal Reserve chair people are considering the path of continuing to raise rates into 2023. It was previously hoped that they would keep on with these 0.75 of a percentage point rate increases. They would be done by the end of 2022, and then things would start to normalize. But what we're seeing now is that it's pretty likely that they're going to be doing it, continuing to raise rates through 2023. The Fed had set a target of 4.6% for the sort of overall rate number. There's some debate now if that's still going to be the target, or if that target is going to increase. It's really important to remember that the primary concern of the Federal Reserve is informed by what happened in the 1970s, where inflation was running really high and then it started to ease off a little bit. And so the Federal Reserve in the 70s, they took their foot off the gas pedal and they stopped raising rates as aggressively. And what followed was a period of stagflation, which is high inflation and sluggish economic growth. It was a pretty devastating decade economically. And the current Federal Reserve is really, really afraid of recommitting those mistakes and leading to another prolonged period of stagflation, which is one of the primary factors that's driving them on this really aggressive rate increase. So, with the fact that we are starting to see economic data slow down, we're not seeing prices really cool down. Gas is still expensive, especially here in Oregon. Food is still expensive. Some prices are starting to come down across the economy, but a lot of things are still really expensive. And that is the Fed's primary concern, is why are prices still so high across a pretty large portion of the economy. So then the last thing I'm going to talk about on the market side is the markets themselves. It's been a pretty choppy couple weeks in the stock market. You've seen a lot of swings, intraday swings, intra-week swings. Saw a little bit of a bounce this week. Unclear at this point whether that bounce is going to continue or not on the back of earnings season. But what's really important to remember is that everyone right now is sort of trying to figure out which way the Federal Reserve is going to swing. And that includes the Federal Reserve. And so you have a lot of this instability as people are thinking, how much are rates going to increase? What are rates going to do? And then once there's market consensus around what rates are going to do, then markets can move in a direction accordingly. But right now, everyone's sort of playing a guessing game, which is what's leading to a lot of these wild swings. The other big factors causing instability, especially internationally, is what's going to happen in Western Europe, given their dependence on Russian oil and gas, which is no longer a steady source. We have winter coming, so what's that going to mean for the broader Western European economy? And then the other piece, also related to Russia's war in Ukraine, is Putin's continued threats of potentially using nuclear weapons, which obviously, as those threats are made or seem to become more serious, is going to spook markets. So another thing to watch as we look forward to potentially days, weeks, months of continued volatility. On the local news side here in Oregon, we have a pretty hotly contested governor's race. It looks like Oregon is the closest it's been in 30 years to electing a Republican for governor. In big part, that's because we have a third-party independent candidate, Betsy Johnson, who used to be a Democrat for many, many years and then switched over to run as an independent. I personally, my family is supporting Tina Kotek, who is the Democrat running for governor in Oregon. Her position on abortion, her position on gun control, her position on homelessness are all really well aligned. I understand there's a lot of anger in Oregon about sort of homelessness, crime in general, but I just think the sort of hardline policy solutions that are being promoted by Kotek's opponents are not what we should be voting for in a democratic society, and B, have some pie in the sky thinking. So if you're in Oregon, I would urge you to educate yourself. Personally, I'd urge you to vote for COTEC to protect a lot of the civil rights, especially that are so important and that we're so proud of here in Oregon. That takes us out of the real news segment. We're going to get really quick into the personal news segment. This is going to be a really quick one this week, but it is my birthday on Friday. So if you're watching this on Friday, shoot me a happy birthday message. I opened my main present last night, which was a Roomba from my husband. We ran it for the first time last night, and it was gross. It picked up so much cat hair off the rug, which is vacuumed several times a month. But apparently what the Roomba can do and what our other vacuum can do are not the same. So it's been pretty exciting over here. The cats are not excited. We haven't introduced it to our daughter yet because we're not really ready for her to destroy our Roomba, but stay posted on that front. Appreciate you hanging in with me here. Hope this news roundup was helpful, and I'll see you next week. Thanks.